Assuming that we get somewhat of a benign inflation report this morning, are you expecting to hear a Powell that is really championing cuts to come?
I don't know if he's going to, guide towards cuts at a coming meeting necessarily, but I do think he's going to leave all options on the table. I don't think he's going to rule out a cut as soon as July, which I don't think anyone is expecting that. We are now expecting the first cut in September. But I think he is going to sound more concerned on the labor market than maybe people are assuming. Obviously, we had a very strong payroll job growth on Friday, but I don't think the Fed is going to love that the unemployment rate is gradually ticking higher and is now at their year-end forecast. I think that's going to be a concerning sign for them.
I mean, but there's been thoughts out there, maybe the unemployment rate is higher because of different factors like immigration, things like that, but just the jobs number in itself is strong enough. So what do you say to those folks?
Yeah, there has been this very strange divergence between the two surveys of employment that we have, the payroll survey and then the household survey that determines the unemployment rate. The truth is maybe somewhere in the middle. There is this idea that maybe it's strong immigration that's showing up and boosting those payroll, very strong payrolls figures. And it does seem, after we had that 272 on Friday, it's probably unlikely that we're going to get a sharp enough slowing in the one print before July that the Fed will be cutting in July. But I do think the ratio of unemployed to labor force in that household survey, there's no real reason to believe that even if the levels are mismeasured in that survey, that the ratio is wrong. So I do think they're going to be concerned that unemployment rate's ticking up.
Okay, so we might hear Powell say that, which I think would be a change for this market and maybe awaken some animal spirits. It is clear that it is a Powell who has a bias towards cutting. The question is whether the rest of the FOMC, share that proclivity, because you have heard the Neil Kashkaris of the world come out and be much more hawkish than Powell. So even if he wants to cut, starting in September and then cut from there on out, can you get the backing from the rest of the members?
Yeah, I mean, it will come down to inflation data, of course, also, and we've heard from some of the more hawkish members like Governor Waller, need to see several months of inflation data. That's probably more than the 2 that we're going to get before July, so today and one more. But I think that's somewhere around 3 or 4 months. And I think we will see things like shelter inflation that are slowing. And I think one common factor among Fed officials is going to be that if you do see a nonlinear weakening in the labor market, they will react to that. And we are maybe on the precipice of that now. I think this is a labor market that the Fed will still describe as in better balance, looks a lot more like 2019, but you are verging on the border of an uncomfortable weakening.
That's really interesting. I mean, when do you really see that manifesting itself, if it's just, again, a little bit uncomfortable right now?
Yeah, I mean, it can happen pretty quickly. What we know about the labor market right now is that businesses have definitely slowed hiring, pulled back hiring. Hiring rates are at 10-year lows. You see that in survey data. You see hours worked declining. You see part-time employment increasing. To us, that feels like every step to cut labor costs other than laying people off. But we have had a pullback in spending in the last couple months. We hear that in the consumer equity earnings calls, retail sales that have been softer. If revenues start to pull back now, maybe you need to do that more extreme labor cutting cost and lay people off. And when that starts to happen, that is that nonlinear weakening of the labor market, and these things can build on each other pretty quickly.
Does it get bad enough that we start talking about a recession again?
Yeah, no, absolutely. I mean, that is the scenario. We in the 80-year history of the unemployment rate, if you go back, full 80 years, the increase that we've had in the unemployment rate over the last year, we've only seen that 13 other times, and 12 of them were recessions. Okay,
so that is a shift, right? Because people have been talking about a soft landing. Does that mean you're not in the soft landing camp?
We are not in the soft landing camp.
Yeah.
We are penciling in this, much more abrupt softening of the labor market, a couple quarters of negative GDP growth, further pullback in consumption and investment. We are penciling in a recession.
I mean, Veronica, it is very different than what's out there right now. I was just looking at Deutsche Bank, which just revised their 2025 assumption for what the dots will be, and basically saying, actually, the dots will be 25 basis points higher, that there will be 25 basis points less of cuts than we were expecting because of the data coming out. What does 2025 look to you in this scenario where you do see growth starting to decline?
Yeah, we have the Fed cutting every meeting after they start cutting. So there's obviously a lot of uncertainty around when that actual start is going to be. But I think the labor market backdrop at that point is going to be enough that the Fed's cutting every meeting. So that for us in our forecast is 125 basis points total for 2025.
Right.
75 for this year, so 200 basis points total, getting back to something that looks a little bit more neutral. But even then, in a recession, you would maybe expect the Fed to be cutting even more, but you'll have the issue where there is still this stickiness to inflation still.
You're not saying stagflation?
No, not stagflation. No. I mean, you will maybe have a period that looks a little stagflationary because the normal cycle should be that rates go up and demand slows, activity slows, and then with a lag, inflation slows. And so I think that's what will happen. Something closer to 2% for sure, 2.3. But are we going back to a nice steady 2% in the long run? That looks a little bit unlikely right now.
I wonder what the danger is in that, because we have a Fed right now who, as they say, are data dependent and they're reacting to every single data point. If there is continuously this lag where the economy is starting to turn, but at the same time inflation at least appears to be sticky, is that ripe for a policy error, that the Fed doesn't act as quickly as perhaps they should?
Yeah, I mean, I think they'll be measured in how quickly they're cutting rates. This is not a recession where the Fed has to cut to zero, I don't think.
Right.
So it will be maybe slower than people are used to in the past recent recessions. Quick cutting to zero is probably unlikely. But 25 a meeting is reasonable, I think.
Does fiscal policy make a difference to you, depending who's on in the White House?
Yeah, I mean, certainly in the near term, fiscal policy has been a really important driver of activity. I think that's a real important reason why this lag of monetary policy is taking longer to work its way out into the economy. We've had very supportive fiscal policy over the last couple years, and that looks to be peaking for this year at least. And then, as we're getting into post-election 2025, obviously a lot of uncertainty around what policies will actually be, but it does seem like fiscal will remain pretty stimulative.